One deep truth: Bitcoin will always have a place in history as the mother cryptocurrency. However, being the first is no guarantee of longevity. There are plenty of reasons to believe that Bitcoin is currently on its way to some kind of phasing out. But what could be the one factor that would pull Bitcoin from its throne of relevance? Since the Cardano founder, Charles Hoskinson, is not known to hoard his perceptions, he had once laid bare his sentiment about the potential of generative AI in an assessment video. It is a sub-discipline within the AI field that enables computer systems to create unique models for realistic and creative content production to be used in fraud activities. So he predicted that millions of dollars worth of ADA coins would be lost within a year due to such scams. Hoskinson commented, "A year from now, millions of dollars in ADA will be stolen due to generative AI. Regardless of how many times I warn you or mention this, remember that you can't get something for nothing, and it seems too good to be true, then it's likely a scam. It's always been this way. I will never ask you for your ADA. I will never ask for your private keys. I won't ask you to invest in a blockchain, but people will still be deceived and defrauded. Unfortunately, videos and audios will be used to persuade you. The situation is becoming very complex due to generative AI, but this is the reality of the future we are heading towards." According to the creator of the popular altcoin, the only reliable way to confirm if something is authentic is through the use of a pretty good privacy key, or PGP for short. He explained the only definite way to verify if something is real is by checking it with a PGP key, because you can't trust what you see and hear. Scammers are evil people without souls. They just want to steal your money. With this, it is an undeniable fact that the world is rolling into a phase where technology will have the final say. This is where the fears begin. Bitcoin may have sustained its relevance as the king of crypto regardless of the price dips and macroeconomic issues, but the advances in technology could offer the final blow. Of course, the lofty Bitcoin price predictions remain. There are more analysts bullish about Bitcoin since the halving event is now imminent. But are these sufficient to offer solace? When Michael Saylor appeared on CNBC after his company MicroStrategy reported its third quarter earnings, he said, "You can never have too much Bitcoin." The fact that Saylor is a Bitcoin bull will not exactly come as breaking news, but he took note of many specific near to medium term catalysts. First among them is what is soon to be a sizable reduction in the supply coming alongside a surge in demand. Saylor explained that the Bitcoin miners need to sell Bitcoin to keep the lights on, and he noted that those sales are currently running at about $1 billion per month. However, with the halving, which is expected to occur in April 2024, this means that miners will soon only have half of that available to sell. You're going to see $12 billion of natural selling per year converted to $6 billion of natural selling per year, he said. At the same time, he noted that spot Bitcoin ETFs are going to be a source of increased buying pressure. Also in an interview, MicroStrategy chairman Michael Saylor discussed a future outlook for Bitcoin. The pro-Bitcoin executive was asked about the factors that will drive up the price of Bitcoin. Saylor explained that the supply and demand for Bitcoin are in balance right now. However, he emphasized with the two events that will boost the price of the cryptocurrency. They are the halving event in April next year when the Bitcoin supply gets cut in half, and the impending approvals of spot Bitcoin exchange traded funds by the US Securities and Exchange Commission. He hammered that following the halving and the launches of spot Bitcoin ETFs, that the demand has got to at least double, so the only thing that's going to adjust there is the price to get to market. The MicroStrategy chairman advised investors to watch for the halving and approvals of spot Bitcoin ETFs, noting that the next 12 months will be pretty auspicious for the asset class. Speaking of lofty price predictions, Saylor believes that the price of Bitcoin will eventually reach a staggering $5 million. On X, he tweeted, "There are three things that are a massive catalyst to cause an acceleration. Those three things don't take us to $500,000. They take us to $5 million a coin." In the same vein, in a tweet on X, Max Keiser, another Bitcoin proponent, confidently stated that he believes Bitcoin's price will rise significantly, reaching an impressive $220,000. He made this statement after reading a CNBC article about changes in the financial market due to concerns about the economy and rising prices. However, he didn't specify when this increase might occur. Well, no one does. Keiser has been a longtime supporter of Bitcoin, calling it the currency of resistance, and one of the most significant stories of the decades back in 2011. His recent assertion was based on the idea that central banks worldwide would print a lot of money, hence a significant increase in the money supply. In this view, Bitcoin is seen as a way to protect money from losing value as prices rise. Right now, the problem is not the staggering predictions, but in that one thing could make Bitcoin tumble in relevance. According to reports, IBM, Google, and other companies are racing to create the fastest quantum computer, a device that can completely change today's cryptography. Secure communications, banking, and cryptocurrencies rely on robust encryption for their security. One crude way to measure the power of a quantum system is the number of qubits or quantum mechanical elements involved in superposition. Each additional qubit exponentially increases the potential processing power of the quantum system. Furthermore, Google recently announced that its quantum computer was 70 operational qubits. In a matter of minutes, this system can complete a task that would take traditional supercomputers tens of years to complete. IBM plans to offer a 433 qubit quantum system shortly and unveiled the world's first universal quantum computer with more than 1,000 qubits this year. Also, the company expects to produce a quantum computer with more than 4,000 qubits by 2025. It's a huge development. Quantum computers will undoubtedly benefit society in many ways, but these rapid developments could be worrying for crypto proponents. Two algorithms already exist that can be utilized against Bitcoin. Now, the main question is, how long will it take quantum computers to achieve this computing power for that? The answers vary wildly, from a few hundred to billions of qubits. Qubits are not created equally, as the quantum states that are used for computation are fragile and susceptible to interference. Therefore, this makes scaling quantum computers a substantial technical challenge. Nevertheless, many agree that even a few thousand would be enough to play some tricks on Bitcoin holders, and this will be achievable with the current decade. The fears are hanging. From another perspective, public key cryptography is the foundation of blockchain security, but it faces a growing threat from quantum computing. Quantum attacks on blockchains are not just theoretical projected events, they are real and they are coming. According to a study, cryptocurrencies such as Bitcoin and Litecoin are currently vulnerable to quantum attacks. Another study found that over 65% of all Ether is currently vulnerable to a quantum attack as well. We are talking about Bitcoin and Ethereum, the two largest cryptocurrencies by market cap. They both have a combined market capitalization worth trillions of dollars. Any disruption and loss of trust will result in significant consequences. Attackers armed with quantum computing can exploit vulnerabilities to steal wealth, perform the 51% attack, and much more, ultimately resulting in the loss of trust in blockchain networks. We can try and stay calm for now, since quantum computing is currently not at a stage to perform such threatening algorithms just yet. There have always been warnings about Bitcoin and other cryptocurrencies, but we never knew that advances in technology could pose challenges. Now, there are many things to be worried about. SEC Chair Gary Gensler once again gave us some advice on cryptocurrency investing during a Twitter Space discussion hosted by the US Army. Calling crypto a highly speculative volatile asset class, Gensler stressed that most cryptocurrencies are not complying with securities laws, and they should be. Noting that crypto is the Wild West, he also questioned the use cases of most tokens. He warned, most of these 10,000 or 15,000 tokens will fail. That's because venture capital fails, new startups fail, but also because history tells us that there's not much room for microcurrencies, meaning, we have the US dollar and Europe has the euro and the likes. Emphasizing that crypto is non-compliant generally, Gensler proceeded to advise investors, don't get caught up in the FOMO, the fear of missing out. Please don't get caught up in that. We may have built resistance to these cautions from the perspective of the government's natural dislike for cryptocurrency, but now that we've seen a potent reason why Bitcoin could fail, it's definitely normal and understandable to be scared. Nevertheless, make sure you hit that subscribe notification buttons, and we'll see you in the next video.